I'm Ahmed Moola and I run the Islamic banking window for ABSA. ABSA is a South African-based bank and it's got banking products in retail banking, in bank assurance, in wealth management and in corporate banking. We're head officed in South Africa, but we have operations in Mozambique, Tanzania and Angola. And I'm the MD of the Islamic banking business. In terms of size and context with regards to the South African market, ABSA is one of the largest offerers of financial services products. We've got about $6 billion worth of share capital. We've got about $70 billion worth of assets, just over 900 points of presence. We've got about 9.5 million customers and approximately 8,000 automatic teller machines, and we employ just over 40,000 full-time employees. I think the key to understanding Islamic banking is the unlocking of the value that is contained in the underlying principles of Islamic finance. So we have certain principles that we abide by, and those principles determine what we can and cannot invest in. They determine how our products are structured, but there's an underlying ethos and a value system. And I think it's that we need to take and translate into modern day banking to enhance the products and the value proposition we present to our customers. I mean, if you ask the question, how old is Islamic banking? Some people will tell you it started in the 1970s, which is the formal type of Islamic banking we see in the banking system today. The principles of Islamic banking go back 1400 years because they are as old as Islam itself. But I think for me, it really started on the 12th of September 2001, because that's when the growth of the industry took place. That's when a lot of the money migrated back to the Middle East and Islamic banks started to grow. And the world started to take note because, even if Islamic banking was $1 trillion at the top end of it, with the global banking industry being $17 trillion, it's not that big a number. But if you look at the 26% growth that Islamic banks are posting year on year, that's phenomenal in banking terms. And it's that double-digit growth that's attracting new players to the market, and it's making the proposition very attractive from a shareholder fulfillment point of view, as well as from a financial institution profitability point of view. Globally, Islamic banks, there are maybe 200 or 300 Islamic banks. They're serving less than 5% of the 1.6 billion population. So there's still a lot of prospect to grow. But as the world is becoming a smaller place and the sharing of information is becoming more widespread, people are taking notice of what's happening in other markets, and they're asking their local banks and as well as international banks, they're starting to demand the products. They're starting to demand a value proposition that talks to their faith. And I believe that's driving the growth for banks to offer more products, for banks that are not offering it to come into the market, and it's really expanding the product offering and enhancing the value proposition. Generally speaking, we see Islamic banks compartmentalized into two categories. The one category being the standalone Islamic banks, and a lot of them emerge out of the Middle East. And the second category is international banks or conventional banks that have Islamic windows. I think they are equally competitive. I think it's different specializations in different markets. If you go to some markets, the local banks are very good at the sort of vanilla type products or the locally based products, but possibly don't have the reach for the more complex products or the products that require a transition of geographical boundaries. But I think conventional banks have done a great job in the sense that they've taken an existing infrastructure that's been paid for and operating and used economies of scale to make Islamic products more affordable, which is what the customers is requiring at the end of the day in terms of the value that they get out of the Islamic products. I think it's at the end of the day, it's what the customer is looking for. I think in certain markets, there is a need for customers to have either the credibility of a familiar brand or higher credit rating or physical or virtual capability or infrastructure. I think all these things are aspects or considerations customers are using in deciding where they should bank. 15 years ago, it was strategically competitive for you to offer an Islamic product that's Sharia compliant. I think Sharia compliance is now a given, and there's enough of Sharia compliant products to choose from, and customers are now becoming more demanding in terms of the value they get from it. There's two aspects to governance. So when one suggests governance, one assumes there's a regulator. And there isn't a global regulator. I mean, there are global governance bodies that provide Sharia standards and they provide advisory service, but they are not prescriptive in the way you administer your governance. And those two bodies are IOFI, which is the Accounting and Auditing Standards, and the Islamic Financial Services Board, which is based in Malaysia. And I think both organizations have done a tremendously good job in terms of harmonizing global standards and providing input and guidance in terms of best practice. It's up to the individual countries and the individual banks to take those guidelines and implement them, so we have a robust governance process for Islamic banks alongside conventional banks. I think we are seeing acquisitions cross-border by larger Islamic financial institutions. We are seeing a harmonization of global standards, and we are seeing more cross-border transactions. Again, without an international regulator, it's very difficult to perfect the harmonization between countries, between banks, or between financial services companies. But I think as an industry, we've come a long way in generally accepting the majority of what we do in terms of an agreed upon standard. And if there are differences, I believe there are exceptions, and they're certainly not the rule. If current growth rates are anything to go by, I think in 20 or 30 years' time, Islamic banking will be far bigger than what it is today as a global banking industry. I think we will see more take-up from global banks. So we've already seen a consolidation of various major banks who are either merging or going through acquisitions. And I think it'll become a given. It'll become a basic banking product offering, and I think it'll stand alongside conventional banking as generally accepted and not a nice to have niche market product offering.